Welcome back to Best Trading Hub, where we move beyond the basics and refine the edge of the professional trader. Alright, listen up. You're looking at candlestick patterns. You know the names doji, hammer, engulfing, but you're also seeing them fail consistently. The problem isn't the patterns themselves, it's the simplistic, beginner-level dogma you've been sold about where and how they work. Today, we cut through the noise and rebuild your understanding from a market structure perspective. Because for the expert trader, a pattern is useless without context. Forget memorizing bullish and bearish reversal pictures. A candlestick pattern is not a standalone signal. It's a footprint of institutional order flow and momentary indecision at a critical juncture. The confusion starts when you trade the pattern instead of what the pattern reveals. A hammer at the peak of a strong uptrend in overbought territory. That's likely a trap, not a reversal. The same hammer, forming precisely at a major previous support level or a key Fibonacci retracement within a broader bullish structure. Now you have confluence. We need to shift from asking, is this a bullish engulfing, to why did this bullish engulfing form here, and what does the market's failed attempt to push price lower at this specific level tell me about impending liquidity? The real edge lies in interpreting these patterns as reactions to market structure like trend lines, supply and demand zones, and order blocks. A doji in the middle of a range means nothing. A doji after a rejection from a clear daily timeframe resistance level. That's a story of pressure being absorbed. Your job is to stop seeing them as magical arrows and start treating them as confirmation tools for your higher probability thesis. Look for clusters, a pin bar followed by an inside bar, for instance, at a liquidity pool. That shows a compounding of hesitation from the opposing side. Ultimately, precision comes from layering these micro price action signals over your macro analysis. Stop getting whipsawed by every textbook pattern on the lower timeframe chart. Start demanding that they prove their significance by aligning with the narratives painted on the higher timeframes and within the context of clear objective market structure. If this reframing clicks for you, then smash that like button and subscribe. It tells YouTube you want more advanced content like this. For our community, the real work begins in the comments. Drop your most frustrating candlestick pattern failure or your biggest aha moment using structure, and let's dissect it. This is how we sharpen the edge together. I'm your name or channel host name. You're watching Best Trading Hub. Until next time, trade smart, trade disciplined.